Hey everybody, welcome to the Sunday live stream. I'm a guest as ever, Jerry V. Hall. Jerry coming in to help us out. Jerry, how you doing today, buddy?
I'm doing well. Hi everyone. Hope you're having a great Sunday.
Having a great Sunday. Watch everything move sideways and maybe evaporate. But that's pretty much where we're at right now in the markets. But today I had to bring Jerry on to talk about a couple of different things. First of all, if you're not following Jerry, there's a link in the description. You can follow Jerry over on X. Good stuff. A lot of good information being put out. But Jerry, what I want to talk today about is the credit markets, because you had sent this to me a couple different pieces, and it kind of starts here with Japan. And it looks like with them raising rates, or excuse me, for the bonds, it looks like they're starting to break some things that are going on. And this article was about how Japan approves a $110 billion stimulus package, and is that good for Bitcoin? And then, of course, this article is talking about monetary tightening and government stimulus and just the problems that they're going through right now and how that affects not just Bitcoin, but the market at large. And you had told me something when we were talking, that what's going on is that there are some hedge funds that have done some pretty interesting things, and it's affecting all markets. So talk to us about what's going on in the background. And then I want to talk about how everything is pretty much a battle behind the scenes between TradFi and the new world order as it is. So
Sure.
Jerry, take it away.
Well, I think I can explain it best like this. I'll keep it simple. You have an uncle in Japan, we'll call him Hitoshi, right? And Hitoshi knows you're an entrepreneur and will lend you money for 0% interest, but he will only lend it to you in the Japanese yen. So if you want to take advantage of that 0 interest loan, you simply take the loan, get the yen, convert the yen into dollars, and then invest those dollars in US assets, whether they be gold, Bitcoin, maybe something in the NASDAQ, maybe something on the New York Stock Exchange, heck, maybe real estate. And you take these assets, and these assets generate you a yield of anything over 0 is profit for you. And you've been able to do this for a very long time. But now all of a sudden, it's time to repay your loan, a big loan to Uncle Satoshi over there in Japan. And you talk to him about refinancing, and he says, absolutely, be happy to refinance, but it will be at 2.8%. And you're like, wait a second. At the amount that I borrow, we're not talking about $100. We're talking about hundreds of million, sometimes billions of dollars. Now,
Okay.
the difference between 0 and 2.8% repayment terms is a large nut or wall or barrier to overcome. And to overcome that, a lot of entities that have been taking advantage of what they call the yen carry trade, which is this arbitrage of debt instruments, are now recently having to liquidate assets to cover those shortfalls, right? The difference between this and that.
How much are we talking, before you go on, Jerry, how much are we talking about as far as, like, are we talking about like $100?
No, we're talking about to the tune of about $240 billion.
Ah, I see.
And just to give you some scope, it was something like 24 billion just in the first 2 weeks of November.
Wow.
So when you are in these positions, it'd be no different than you or I if we were counting on the refinancing of a loan with a certain set of terms, and we've adjusted all of our business practices for that particular scenario, and then we go back to the lending entity and they say, things have changed. We no longer can refinance you at those terms. We will have to refinance you at different terms, whether it be the amount of repayment or the amount of the monthly installment to make the credit payment. Those two things, once they change, can throw your whole business model out of whack. And that's a lot of been what's happening, right? It's that same premise. When we look at the positive impact of a Fed rate reduction, it's all based off the same principles of, can I borrow today more for cheaper than I did yesterday? And if I can, then I'm going to, because expansion in today's world is primarily done through the acquisition of more debt and more favorable repayment terms of that debt. And the minute those factors change, all of the downstream market effects change, because they change the business model of those who are involved in that refi, that whole credit cycle, whether it be refinancing or new debt being acquired. Because if you acquire debt today, most likely 90% of the time you're going to be a refinance participant when the terms come to roll over that debt.
Right. Got it. So it seems like this is the things that no one really talks about. And like when I was in school, no one talked to me about this. I mean, basically they said, just save your money, put it in a savings account, and you should be just fine. Work 40 to 50 years, maybe get a pension, and maybe you retire, and then everything will be fine. Essentially, don't live until you're about to die. So when you talk about that with as far as like debt, that is it is a weird concept, but it does make sense. And then just to recap what you were talking about. So first of all, who is taking on all this debt? They took in this $250 billion of debt, and they went to Japan and they borrowed, they put in so much money into Japan. And then they took those.
What they did is they bought bonds from Japan. So they acquire a bond, which is a credit instrument, and that bond is going to yield this or it's going to be that. So for instance, and it's not always bonds, a lot of times it's commercial loans. A lot of times it's commercial loans, and those commercial loans are backed by the commercial entity that gave the loan in yen, backed by Japanese bonds. It's a house of cards if you really, really break it down. I don't think your audience wants to go into the minutia, and I'm really not an expert in the minutia, but I understand the process. And it's basically, we're going to collateralize something that only one entity can authorize its value. For instance, a bond from a central bank is only redeemable at the central bank, not anywhere else, right? So it's like I can print. Our Treasury does it all the time with our with the Fed, right? The issuance of bonds that nobody buys except for the Fed, which collateralize value for loans that go to banks. You and I couldn't do that.
No.
Can you imagine you and you're in the pool house there? You got a little printer. You print out the digital asset news bond, and only the Bank of Jerry has the authority to issue you real value against it, even though there is no intrinsic value other than the confidence that your dog has in the food that you're going to provide him tomorrow. Well,
yeah, exactly. That's pretty much the big thing. You know, just to kind of sum this up before we get to the next piece, is it comes down to this. So when rates are being cut, and then people can take out more loans because they can have more debt, and they're really happy because they're like, oh, the rates are going down. That means that I can take more debt onto myself and I can pay back any of their high income loans. Got it. So it'd be like this, just like we've talked about. And this is a very small snippet of time and space. I mean, we can take a look from 2008 to today, just what happened with our markets. We were doing great when we had flat rates, but as soon as we started to raise rates, because we had flat rates for, gosh, 8, 9, 10, what is that, 7 years or so, 8 years almost, because of the financial crisis that we had in 2007, 8, 9. And then once we started to raise rates, we could justify it, but then we continued, we started to collapse. Same thing happened in 2020, we were flat, and then we started to raise rates in 2022. What happened? We collapsed. And that's why I think the current administration is so adamant about dropping the rates to 1%, because they know the value of debt. Makes sense. So that's just one more thing for you guys to think about what's going on globally and kind of bring this all together. But then there was this piece. This is a great article, and I linked this in the description from Marilyn Hodel, Bit Bonds, Structural Innovation. And what they talked about, it was just a big, massive overview. because Jerry, I mean, we were just talking about a very small piece of this puzzle, but if we take a look at globally and the debt and the people behind the shadows, this was a great piece. So a link in the description, you can check it out. Trump's gambit, the quiet war between the White House and JP Morgan. It's long. I'm just going to give you the basics, and then you can read the entire article. But you know, it's pretty interesting. So here's where it talks about this, and this is what I always thought. The old order is centered around JP Morgan, Wall Street, and the Fed Reserve, and the new order is Treasury, stablecoins, and Bitcoin, which makes sense, right? I see there's like the power struggle right now, and the banking industry has been in power forever. So for them to give up anything, even an inch, is very difficult. And this is the part that confused me because I don't think of it this way, but now it makes sense. Most people think of JP Morgan as a bank. That's exactly how I think of it. Just as a bank, people go there, transactions. You got Jamie Dimon, and he hates Bitcoin for whatever reason. And that's pretty much how it is. And I just thought, it's just a bank, who cares? But JP Morgan is the operational arm of the global financial establishment. I know people in the comments, you can say, Rob, so naive. Well, so what? The entity that sits closest to the Federal Reserve's core mechanism is JP Morgan. They are the influences dollar settlement worldwide and acts as the primary enforcer of the legacy monetary architecture. And that's interesting. And then it comes down to this. I don't want to get political on the channel because it always devolves into just the worst comments. So if I say the word Trump, nobody flip out. So when Trump posted about Epstein's network, and he did recently, and thankfully we're going to get the documentation is going to be released. Yes, it'll be redacted. I get it. But when he said this, when he said, hey, I'll be asking Pam Bondi, the Attorney General in the Department of Justice, to investigate Jeffrey Epstein's involvement in relationship with Bill Clinton, Larry Summers, Reid Hoffman, JP Morgan, Chase, and many other people and institutions, determine what was going on with them. It was pretty much like a shot across the bow. Like, look, this is what I think, and this is how I want to bring you down. I don't know if that's going to be the only way, but here we go. So you had JP Morgan, you got everything going on. And this was the interesting thing, because MicroStrategy is kind of like, it's like at the center of everything. And it states clients trying to transfer their MicroStrategy shares out of JP Morgan report delivery delays. We talked about this a couple of days ago. I don't know if you guys remember this, but there is something going on with MicroStrategy, the shares that they have, and of course, you know, trying to transfer it from one brokerage to another. And JP Morgan is just saying, we don't have it, or we're having a delay, or there's kind of outage, hinting at custody stress, the kind that appears only when internal plumbing is under strain. So now things start to make a little bit more sense, because it's like, oh, they're just trying to slow down the operations. Potentially. I'm not going to tinfoil hat everything, just saying potentially. The administration is currently working to pull the center of monetary issuance back toward the U.S. Treasury, but to the U.S. Treasury, not to the Federal Reserve. The Federal Reserve is about as Federal Express. So when they pull when they pull this stuff, and they bring it back to the U.S. Treasury, that's a governmental agency. And they want to do that with Treasury integrated stable coins. Again, my thesis, stable coins will do well with the best, essentially Binance, Ethereum, Solana, and Tron. Programmable settlement rails, again, the best. And then Bitcoin reserves. So if that's the case, that's what it is. Then it goes into some other crazy stuff. Hold on. But this one, MicroStrategy, the conversion bridge. MicroStrategy is not just another corporate Bitcoin holder. It's become the conversion mechanism, the bridge between legacy institutional capital and the emerging Bitcoin monetary architecture. And lastly, if the administration envisions a future where treasury-backed digital dollars and Bitcoin exist, MicroStrategy is a crucial corporate conduit toward that transition. Jared, before we get into this response by Michael Saylor, there's a lot of things going on with MicroStrategy. What are your thoughts on just that, the basics of that article? How crazy is that, or does it make sense?
No, I think it deserves further investigation and fact checking, right?
Yeah.
We're kind of, you know, I'm starting to transcend the taking things at face value and doing more research and verifying things and fact checking things with multiple sources before I start to even really form. I think it's interesting. I think it requires more investigation, and I can definitely see from the pure standpoint of follow the incentives and I will show you the outcomes kind of thinking.
Yeah,
there is a tremendous amount at risk for the old guard that likes to kind of do this, we help create the laws are in our favor, kind of like being the casino, right? The casino always wins. Well, that's how it's been for banks for a long time.
Yeah.
Right. They've been able to create out of nothing and profit from us. We are the product. And these technologies like blockchain, specifically Bitcoin and others, do promise to upend those things because of just the sheer transparency involved, right? It's like when you know.
Yeah.
Why would you go back?
Yeah, and that's the great, beautiful part of Bitcoin and digital assets. The dark side is, of course, what's going on with the leverage plays and the dark money and these different pits that are out there, and what happened on October 10th. Let's never forget that. We let institutions in, we let more of the corporations, and we reap what we sow. So I know everybody was celebrating, myself included, but you got to take the ugly, nasty vileness that comes along with TradFi and how it merges and hopefully doesn't destroy what we're trying to build here. So I'm going to have you listen to Michael Saylor, what he talks about, but I just want to give everybody a quick tip, which I thought was pretty smart in this article. At the very bottom of this article, see if I can get to it. Yeah, that. It said, and this is very good. Note to readers, if these concepts feel unfamiliar or complex, here's a simple way. Copy the text, open AI, paste the text. And I was like, it's not a bad idea. So I did it, and instead of reading that whole thing, it gives you like a nice little summary. So if you're like, hey, I got 4 kids, I got 3 jobs, I only got time for this, just do that. Makes things super simple for you. And then let's listen to Michael Saylor, because there's a lot of news that are going on with Microstrategy. If there's like some kind of like margin call that is going on, which I don't think that's actually what it is. And then there's something with the MSCI where they're essentially going to potentially kick out MicroStrategy in these digital asset treasuries. And of course, what's going on with the number of the margin. And just take a listen to this. Maybe it'll ease your worries and woes.
Bitcoin's appreciating about 50% a year for the past 5 years. We expect it'll appreciate about 30% a year for the next 20 years. And we offer these credit instruments that pay about 10% dividend yield in the form of a return on capital dividends. And so it's a pretty strong business model. If you want to work out the math, as long as Bitcoin goes up 1.25% a year, the company can pay the dividend forever and create more shareholder value. If Bitcoin stops going up 0% forever, we got about 80 years to figure out what we're going to do about
80 years. So that's pretty much it. So everybody, Jerry, before we wrap this up, what do you think about Saylor's comments? Are you worried about MicroStrategy? And, I think we should be worried a little bit, just to, like you said, do your own research.
If what he says is technically true, which I believe it is, because for a person in his position as the chairman of the board of that publicly traded company, if he were to make false statements regarding his company or the products that they have or provide or sell, those are felony charges. And I do not believe for 1 second, to ease the mind of some crypto D.A.N, he would go on public television where he's recorded by 50 different elements and commit a felony. So I believe what he's saying is true. Therefore, no, I don't have any fear whatsoever. And matter of fact, I'm assured that the underlying elements are still as strong as they were when we were at all-time highs at 126 for Bitcoin. Therefore, the thesis is buy as much as I can, and if I need to, sell a kidney, because I've got 2 perfectly good working ones.
That's true.
Blood type B positive. For anybody out there who needs a kidney, I'm open. I'm there.
Hey, well, a couple of things. First of all, you only need 10 to 15% functioning of one kidney to stay off dialysis. So if you I'm just saying, this is not kidney advice. This is not dialysis advice. I'm just saying, if you don't need that kidney, just sure. And then also remember, everybody, Tom Lee is still bullish. And he says that Bitcoin will be as high as $200,000 by January's end. So we'll go there. And then lastly, before we get into the Q&A, like what Jerry said, you know, Michael Saylor, if he came on here and said what he said and it was inaccurate, he's committing a felony. I will just say, I think Michael Saylor was a very smart guy. Hopefully he didn't do that. You know, Sam Bankman, really relatively smart, did the same thing. That's why he's in jail. So anyhow, that's it for today, everybody. If you like today's video, give it a thumbs up. Consider subscribing. We talk about is time sensitive. Now let's get into a little Q&A, and we'll answer all your questions. There was a couple of ones. Gas fee in the beginning, before we even started and went live, said, hey, what happened with Cardano? Apparently there was an attempted hack on the chain itself, but apparently it was thwarted and no one really knew anything. No one was anyone the wiser. So I don't know if there's something going on behind the scenes more. I saw Charles Hoskinson gave out a nice little release on his channel and talked about what happened, and didn't seem like it was a big thing. I think we're up and running right now. Jerry, anything to add to this one?
Yeah, so technically there was a bug that was exploited, and there were 2 chains for a period of time.
Really? Cardano Classic and
But
Cardano?
the interesting element of this is that at no time was the chain halted, right? And the correction and fixes were put into place extremely fast. And once a relatively decent sized majority of the stake pool operators updated to the 10.5.3 new valid, like, I'm sure your stake pool is up to date, right? You guys updated your...
Yeah, we already did it. So we're
happened, right? As soon as you had access to the release, boom, you went to your nodes, your hardware, you configured the new relays, and bada bing, bada boom. And so, although absolutely it happened, I think it's a testament to how it was built, that it didn't break the chain. It didn't cause a catastrophic failure. It did not. I mean, it could have done a lot worse. But the fact is, it did. There was a bug that did exploit the chain. 2 chains were created as a result of it, a fork, and now it's been corrected without any slowdown. It did not stop the chain. They didn't have to reorganize everything, go back to a set point, and refire it up. I think that's amazing.
Yeah. I don't know if any other, I mean, some chains would probably just crumble and collapse. So I heard about it, and then it was like, then the next thing I heard was like, everything's fine. I'm like, well, great. And then the guys that do the stake pool were like, hey, we upgraded already. I'm like, all right, sounds good. My guys are on it. You gotta love it. Plato says, you know, we should be like Jerry, just be more B positive. Da-da-da. Echo Lee says, you have 5 liver. Yeah, exactly. You got 5 liver lobes. So just saying, you know, if you're going to give up a kidney, I mean, 5 liver lobes, and they can regenerate all the way 100%.
The liver.
Yeah, exactly. Well, I mean, I destroyed mine when I was younger, but I'm sure someone would want it. Let's see what else we have here. Oh, this is a good one. Tony asks, because we talked about this last week, Jerry, did you take that collateralized loan, or did you say,
we didn't hit my number. We needed 80,000, but I am still contemplating doing something with Nexo or Lendon, LEN, Lendon.
Lendon, yeah, LEDN. That's the one with the. I think they just do Bitcoin collateralized loans, or they do other crypto.
Bitcoin only. Whereas Nexo, there's a whole host of assets that you can collateralize.
Gotcha. Jeff B says, hey, Q for Jerry, what's he building and what network does he like to build and why?
Ooh, well, my small startup is called Compute Portal, and it's actually not on a crypto network. It is a network. It's basically, we're trying to build the Amazon for compute. So we want to compete in a decentralized manner against centralized entities like AWS, Google Cloud, Microsoft Azure, etc., by combining a network that we build, as well as integration of networks like Akash and Aether and NewNet and Filecoin and Render and Iogon and all the other decentralized resource services out there, bring them to one place and offer different hardware solutions, nodes as a service, all kinds of incredible Web3 elements, because the world is going digital and more digital and et cetera, et cetera, et cetera. And so compute, we feel, is the oil of that expansion. So why not be at the commodity level?
Yeah. Why not be at the commodity level? Excellent.
So thank you for asking, Jeff.
Yeah. How about this one? Well, Captain says, I agree with Jerry on Sailor comments. Very nice. Echo says, I used Nexo until the SEC took away their ability to pay yield. Do they have that back now? I'm not for sure.
They do for non-US clients. And because I'm in Costa Rica,
okay.
all of my, to Nexo, I appear to be a Costa Rican.
Here's a question. SWI or Link for the next 5 years? What would you, if you had to go between those two, which one would you get?
Totally different things, right? SWI is not trying to be the oracle for all chains out there. They're a layer one protocol. They want somebody to build a dApp on top of them that'll service 1 billion people, no differently than the way Ethereum does, or Avalanche, or Atom, or Cardano, or any of the other layer one. So I think they're two totally different things. So I think you could, if you had $1, put 50 cents into each if you like both of them.
I go with that. Like for like upside potential, it's a weird thing because it seems like once you get utility, like real utility in the market, barring Bitcoin and, gold 2.0 and peer-to-peer transactions. I mean, you're saying that. It just seems like the more utility you get, it's like the less it does. It's all speculation. Because like if you look at Chainlink, like every chain should use a Chainlink if you're a layer one or layer two. You have to pull that outside data into the chain. So I look at Chainlink, I'm like, this should be doing much better. But it just isn't. It's the same thing with like World Mobile Token, right? They rolled out their plan globally for the phone service. I'm using the phone service. It works great, data and calls, yet the token itself, pretty much flat, or because it's an altcoin, it's going down. Chainlink, going flat, going down. And then of course, and then you take a look at SWI, it's doing good things, it's building, but it's all about momentum. And when momentum starts to go down, liquidity, it's just like a never-ending battle, it seems like. So if it was me, like logically, I would say it'd be Chainlink, but who knows? Let's see what else we got. Cardano's there. Collaboration known. Got that one. Oh, is there any way to tokenize a kidney? I'm not for sure, but I will tell you, I'm going to be at Tokenize Puerto Rico in January. Ooh. So I'll have to ask the guys that question, and then we'll go from there. Let's see.
You know what? That's something I should try.
Yeah, Jerry, you should try to come over there. Be good times. Jimmy says, what did I miss? We just me and Jerry gave our price predictions for 2026. And we pretty much just told you when we're selling and when we're buying, and it's all verifiable. And that was it. Just kidding. We just talked about how bad the markets are, and some tinfoil hat stuff, which is pretty fun. How about this one? Cryptomon says 100K bull trap, then 70K, then 50K, then 30K unwind. What's the probabilities, Jerry?
So here is my observation, and it's just my perspective. What this question is referring to are mechanisms of manipulations, and they are more profound and easier to execute with lower barriers when you are in lower liquidity elements. And so when crypto 2017, 2018, 2014, these different, we'll call them market cap structure elements of our industry, I think it's getting harder and harder for single entities to do those kind of manipulations. Therefore, it takes greater and greater pools of capital to create those type of obfuscations in the marketplace. And now that we have outside of our industry passive flows into our industry, i.e. ETFs and treasury strategy companies like Microstrategy, who have literally said and committed to, when we have extra money, we're buying Bitcoin, period, right? Those passive flows create a buying pressure that is positive for us and therefore harder to hit the downside numbers. Like, for instance, what did the lowest we get to? 82 grand, 83 grand so
Something like
far
that.
in this?
Might be a wick to 80. I don't remember. Yeah.
Right? Now, in the past, the pressure that created this contraction would have taken us down to 30,000.
Yeah.
Right?
Yeah.
And so as the market participants rotate into a more institutional based set of participants, we are going to find it harder and harder and harder to create those type of circumstances in the market, just because of the structure of the participants.
Mm-hmm.
A lot of this stuff is locked up, and you need nimble, large stacks of liquidity to create those kind of situations.
Yeah.
So as
And
a
that's
market in Bitcoin, I don't think so. Maybe in things like lower liquidity assets, like the 5,000 different alts, absolutely, very possible.
And that's why, like, I mean, just to finish this up, just it goes on to your very first point about liquidity. And when things are locked up and you have to unwind a trade, like you just talked about within Japan, these are the problems that people have to sell off. That's why there's so much sell pressure. You have a lot of sell pressure, things start to tumble. And then, of course, when the rates are being raised across the, I mean, in Japan, across the world, we're seeing some reduction in rates. There's only so much you can do. So I think there's going to be a little bit more sell pressure. I think November is going to be kind of shot personally. We'll see what happens in December. Remember, Tom Lee says 200,000 and he's never wrong. So I hope he's right. I hope Tom Lee's right, but we'll see. Everybody, that's it for today. So if you like today's video, thumbs up, subscribe, check out Jerry, and we'll be back next week for another show. Thanks, everybody.